Rand finding a bit of a firmer footing this morning, so trading back around that 7 Rand handle against the dollar, weakening above 7 Rand 6, almost to 7 Rand 7 yesterday, and it seems that it was local factors that played for once rather than global factors.
Indeed, yesterday we saw the Rand have a renewed bout, or rather renewed wave of selling pressures, and the depreciation in the currency really came on the back of domestic factors rather than merely the movements in the euro-dollar or commodity prices. We also saw some fears that South Africa may undergo a renewed bout of energy cutbacks coming through from Eskom's indications yesterday. However, these may have negative implications for GDP and FDI, which saw Rand bears being spurred on. However, Eskom yesterday denied the fact that these energy supply cutbacks will come into effect, but it does really highlight the fact that there are some risks of the economic recovery going forward. We saw the Rand breach 7 Rand 6 to the top side yesterday, which really opens up hopes for the fact that the Rand could possibly move towards 7 Rand 17 in the near term.
Of course, trading at the moment at 6 Rand 97, so that's a 10 cent difference from yesterday. Looks like the euro is also showing a bit of a mild recovery this morning, with China interested in buying Portuguese debt. Do you think it's going to follow global factors again now that that Eskom scare is out of the system?
Yes, I do think that we could possibly move back towards the global factors impacting the currency movements. But we also have the PPI data coming out today, and if those numbers undershoot expectations and come in lower than expected, we could possibly see some renewed Rand strength coming in from that. However, our expectations at this point is for PPI to come in to moderate to around about 7% year on year in April.
Okay, that's down from 7.3% in March. And I suppose that ties in with what we saw in the CPI reading for April, where that CPI was a little bit tamer than expected.
Yes, indeed. We expect the moderation to come on the back of the fact that in the first quarter of last year, we had very low base levels, which would have assisted the upward movement of PPI in the first quarter of this year. The second quarter, however, we saw these low base levels dissipate and would obviously cause some kind of moderation in the PPI numbers for April. There's also been some moderation in the food inflation of the PPI, so those factors could potentially keep the PPI number slightly lower than the previous month.
Well, globally, I see that US durable goods numbers out yesterday, very disappointing, so the biggest fall in 6 months. Anything in the calendar today that we should be looking at globally?
The GDP data out of the US is also something to look forward to. The first quarter, it's a second estimate of the first quarter data. We saw growth come in at 1.8% in the first quarter. This number is expected to have been increased by 2.2% from the 3.1% growth that we saw in the previous quarter, in the the final quarter of last year. So very mild increase in that number, but still positive given the fact that we are seeing some kind of upward momentum in the US economy, despite the fact that there are some pockets of weakness.